Just talk us through what happened here. It looks like the market has reason to be fairly worried.
Good morning. So first of all, let me say that we have said already at the beginning of the year that 2018 will be a transition year and an investment year where we are actually investing in our future growth opportunities, which is exactly what we are going to do. If we look on the reasons for the profit decline that you have mentioned, it is to say that the first and foremost reason for the decline in our operating profit is actually related to currency. So out of the 13.7 decline in EBITDA pre, which is our most important operating metric, some 11% are attributable to negative currency effects, and only 2.7% is organic. And the organic decline is due to higher investments in our healthcare division, predominantly to drive our promising pipeline projects and to prepare for an eventual launch of Mavenclad in the US. It is a little bit of less positive one-time effects this year compared to last year. Last year, for example, we received a milestone payment for our new drug, immuno-oncology drug, Bavencio. And last but not least, of course, also the decline in liquid crystals in our performance materials division also had an impact on the quarterly profit numbers.
What does the market share picture look like in liquid crystals? How is it shaping up, and how can you make sure to protect or avoid against a drop that we've seen in the past?
So the market share development actually follows our expectations that we have outlined recently in a capital market call beginning of July, where we said we expect this business actually to decline over the next couple of years continuously, but in a very controlled way. And from 2020 onwards, so after 2019, we shall be back also to, let's say, a 2 to 3% growth CAGR in the future, and a margin level of around 30%. We are defending our market shares with our quality leadership claim, with good technologies, with service and supply reliability, so with all actually the competitive advantages that we still have in our business when it comes to producing liquid crystals for displays.
So is it possible that you do any M&A in this vein, or do you have any plans to do any M&A going forward? I mean, especially you're focused on deleveraging through next year?
Yeah, that's absolutely correct. So the deleveraging still remains to be a top priority on our agenda. I cannot completely rule out small acquisitions over the next 1.5 years, but we would definitely refrain from any move which would be 500 million or more until 2019. That is not on the radar screen at the moment. And also the net cash proceeds from the upcoming sale of our consumer health business are supposed to be used for deleveraging only.
Let's switch gears and talk a little bit about the life sciences unit. It's one of the bright spots there. What are the drivers that you see and the development that you expect of life sciences going forward?
Yeah, so we have seen a very, very nice quarter when it comes to top-line growth. And that growth is actually driven by all of the three SBUs. So in research solutions, we see a strong growth in the volume of experiments. We see continuing growth in academic funding, and also ongoing investments in industry R&D. In process solutions, we are benefiting from strong pipelines of the pharma companies, from strong demand for monoclonal antibodies, and from a continued shift to single-use products. And in our applied segment, also here we have been nicely growing, and the volume growth is coming predominantly from some, let's say, overarching megatrends, if you want: population growth, rise in quality standards and also increasing testing needs that go along with stricter regulations. So we are very satisfied with the top line. In the bottom line, we have accounted some one-time effects in the second quarter, which drove the life science EBITDA pre slightly below consensus, but we are expecting to catch up in the second half of the year, and actually we have kept our organic EBITDA guidance unchanged for this division for the full year 2018.